we're going to get into software, what the market is seeing. The market kind of gives us a future look prior to the technology being implemented today. I'm Niraj Patel. I'm a senior software analyst on the Bloomberg Intelligence team. I'm covering app software. We have a team of about 15 technology analysts. And you can see here 500 Bloomberg Intelligence analysts. We cover anything from energy, metals, mining, semiconductors, globally, Taiwan, South Korea, US. So a lot of different markets. We get a lot of collaboration. We have a lot of data interaction. So today we want to talk about this theme about AI in the marketplace. And I think what has just shocked the stock market, the technology sector, is agents. And we want to talk about agents. And I think this depiction, at least to analysts, is quite simple. Human-driven workflow is what we're used to for the last 30, 40 plus years. You log into an ERP, you put in some information in a software, it types in automatically some of the information. You have a human look at that information and you correct it, and a server has some rules. And you get a human on the other end just to check it, to approve it, and you have your expense approved for an individual. The agent workflow, you have a lot of software that's stripped out. What software is going to be retained and what is going to be used by the LLMs and other tools? That's the major issue that the market is wrestling with. And I think when we look at a couple examples, we look at marketing and coding. As the first panel highlighted, a lot of usage of coding agents, Claude and Gemini, in the workplace today. They've tackled the hardest professional information worker scope, which is unusual in terms of software disruption. But marketing is very language heavy, repetitive, data intensive. And you can see this type of cycle. You have an AI agent for marketing. It's going to retain some of the marketing campaign information, tap into a database to get the branding information data, and you get notification to the team, to Slack and Notion and other tools, and that writes back to the database. So marketing is a high area for disruption. You've seen it in the type of companies like HubSpot, like Salesforce, like Adobe. They've been the first ones that have been the most disrupted to date. Coding agents, you can see on the right, a lot of different technologies there that we've highlighted: GitLab, Docker's, VS Code, Microsoft, Datadog, and they're being disrupted. And what we think has stood out to us, and I think has stood out to a lot of people that are using the LLMs, is the step change that you see in the LLM models. And you have one benchmark here. It's a software engineering bench verified, and that just measures what % of the code is correct. Identify a bug, it'll edit that bug, and it'll produce a patch, and if it's successful, you'll see that type of score. 2024 in the spring was around 30% for these models. Now they're up at the 70, 80%. That is a critical point, critical level of performance. If you could help me on the clicker. Oops. And so the agentic coding, that leads into a major building block. The tool integration, we've seen some communication protocols come to the market. Prior to 2024, you had to do bespoke custom code to connect the LLM to tools. Now you have some protocols like MCP, which is coming to the market, making it much easier to interact with the CRM, the HR, the payroll application software that's in the marketplace, connecting them to an LLM, connecting orchestration as well. You can see on the right a lot of third parties with orchestration, because you don't have an agent. You have the brain as the LLM. It takes up the majority of the talking points to date, but you have a lot of tools in the workplace to get work done, and you need a lot of orchestration that has to be looped as you have errors, as you don't reach your goal. So we have a lot of technologies: Llama Index, LangChain, Crew AI, just to name a few. And you can see the developer, kind of hockey stick moves that we've seen. You can see LangChain downloads. That's an orchestration tool, and you can see this type of move. It's just stunning. You have over 250 million downloads a month. It's not all humans. You have a lot of machines doing this, but it's just a metric just to show you the interest in a major building block for agents. MCP, the communication protocol, same type of trajectory, Claude Code, an actual product. And we look at coding agents because they're the first monetizable use case for agents in the workplace. And I think Anthropic is a 9 billion annual recurring revenue run rate today. It's going to 30 billion by the end of the year. And this has never happened in the history of technology in terms of the steepness. So you have this type of that type of building blocks in place. That has resulted in this picture. And you can see stock returns for major software companies in 2025. A lot more red than green. And overall, they were down 35% software. When you look at the left side, this is year to date. And you can see all these names that are up here. Oracle is so far the best off because it has a lot of AI infrastructure associated with it, 11%. But you can see Intuit, ServiceNow, Workday, HubSpot, they're factoring in significant disruption. And the management teams get on the earnings call every quarter, and they're citing fundamentals are constant. We haven't seen a change in recurring revenue. We haven't seen a change in the KPIs for this industry, like the contract bookings or the net revenue retention. That has stayed relatively stable. But you're seeing the stocks inflect well ahead of any disruption to their business models, which are showing up in the financials. And you can see the valuation that the market is placing here on the left side. The price to earnings for S&P 500, that blue line is pretty constant, 20 times forward earnings. You can see the shade of lighter blue software used to be at 100 times during the COVID and the online presence by SMBs to come online and have their visibility exposed digitally. It's come down drastically. And this is because of the AI agent disruption that's still ahead. It's very early stages. And when you look at the right side, we look at software to semiconductors. And yeah, AI is eating software. There's no question in terms of the market today. And you can see this type of valuation disparity that has occurred over the last 15 months. Software used to have a sizable premium, 2.4 times. Now it's at a fraction of 0.4x. Where do we see this market? We do not. Software is an integral part of business workflow. LLMs are not going to take, from our view, application software scope in its entirety. They will take what we see as subscription, seat-based model type of work. You can imagine somebody is going into the workflow. They're not going to engage with the CRM product. It's quite sticky, the CRM today. You have to have a lot of familiarity. You have a lot of menus, bars, and buttons that somebody has gained experience over the last 12 months. Now you'd rather, the path of least of resistance is to open up ChatGPT or Anthropic Claude and just ask for the outcome and let that purpose be executed by the agent. We think the software market in totality grows 10 to 11%, but you see this type of split here. Outcome, which is agent-based or agent-led software, is going to lead that disruption. You have a lot more players coming into the market. LLM providers, SaaS incumbents are definitely going to be in this position. They are introducing every day their AI agents into their existing products as well as standalone products. You have the AI native companies, which are getting a lot of VC funding, and enterprise teams who are going to stand up their own agents. So we see a positive overall market, but below the surface, a lot of disruption for SaaS incumbents because of their business model, which relied on recurring revenue. You pay $20 for the current month per user. You get $20 for the next month. You add a couple of advanced features, and over the year, it grows to 22 and 24, et cetera. And when we look at this application software segmentation, you can see how the pie is in terms of applications. Engineering apps is relatively small, 44.5 billion. That is on the lower end of AI disruption. The closer you are to a manufacturing, and we'll get into this, is a lower tolerance. And you can see this chart. It has a lot of detail in it, but the highlight is we look at 2031, and you can see agents as apps, where the expectation is from survey across a lot of major companies and a lot of major customers. This is done by IDC and Bloomberg, and you see contact center, customer service, digital commerce, ERP, they are 100% by 2031. Finance, not the case. PLM, not the case. Procurement is on the higher end. And I think the number one determining factor for this boundary or this shift has to do with the kind of the basic story that we understand today, probabilistic software, which is on the right, and that's what you use the LLM. It gives you a probabilistic answer. You cannot have that if you're calculating payroll, right? You need an exact, precise number regardless of how many times you run the prompt. We do not need something that's close. Of course, if you're asking for the capital of France, it's going to come up 99.9% with Paris. So that's okay in those cases where you have LLM's heavy use on languages. And you can see deterministic software. This is still going to be intact and in place. Financial accounting, you need precision, as we've mentioned. Python interpreter, you need exactness. Medical device control, you know, if blood sugar level reaches X level, you need exact Y level of insulin. And databases, you need to get the data from exact precision of row and specific characteristics. So we think there is this split. If you're on the right side, you get disrupted more. Left side, not so much. You have some runway to take advantage of the LLMs in your product portfolio. And on the right side, you can see on this table, we get into a little more detail in what we call deterministic, ERP, payments, infrastructure, accounting, payroll, and tax. You can see the name brand companies, engineering, design. And on the left side, once again, pattern-based, variability is high, failure tolerance is quite low to medium, which means you're not going to have catastrophic operational failure if the LLM comes up with a kind of right answer, right? And that's the case in customer support in some examples, sales, HR and recruiting in some cases, and in terms of finance, budgeting, and forecasting. And in terms of the numbers, we look at every major function, and it's down to maybe as small as 5 billion, which makes up this 700 billion application software market. And you can see in red, that's the highly disrupted area. Probabilistic, in green is deterministic, and you see about 39% is in probabilistic. And we think it's a hybrid, and it's going to be a mix, and you're going to see this disruption that's going to be ongoing. What is not going to stop is OpenAI and Anthropic's move up the stack. In this picture, they're already at the agent level. We're quite familiar with that. But now they're moving into the operating system, and they're moving into the runtime level. So this is on the execution front. And you've seen this move. We're waiting for OpenAI to introduce their Claude Cowork kind of example. You know, the Claude Cowork, they came up with their 11 solutions at the end of January. That was a major impact for the software companies. The next battleground is this Agent OS layer. And we think you're going to have the hyperscalers that are going to be there, and you're going to have the LLM providers. And the underdog is the ServiceNows and Salesforce per application. They're an underdog in terms of getting a space here, but let's see how it plays out. And this is just highlighting this type of major disruption that happened to the space. Who's going to pay for this, right? That's a good story about LLM. They make our lives easier. Cost is a significant issue, right? And that is right now kind of in the gray zone. At Bloomberg, they don't care how much we use chat or Anthropic or Google. I'm imagining in a year there's going to be a break, right? And it's going to be by department and by function. The LLM inference cost is significant, right? And in addition to the external AI piece, the orchestration overhead, and the human in the loop. If you have an AI agent for payroll, you're going to have somebody checking that. That's a lot of volume you're going to put on a human to exact or kind of oversee the agent. Also, another picture that we're seeing is the LLM token cost has declined quite a bit each year, 83% in 2024, another 90% in 2025. It might be plateauing. There's a realization by the LLM providers they're running into a physical constraint in energy, in data center rental, right, in water supply. So there's a lot of physical aspects to providing an LLM, and you may be seeing a plateauing in the token cost. So that's going to put a further break in terms of what applications can be used or can be leveraged, these LLMs. These are two detailed examples. I just want to highlight the HR payroll. When we run through this case of workflows and an agent operating in those three workflows, the impact on the gross margin. You start out with the traditional SaaS gross margin, 75%. It walks all the way down to 68.4% in this simple case. You can see the token cost. You can see the tokens used per these workflows. On the right side, marketing automation, not as severe, but still a major impact. This is 200 to 300 basis points on the gross margin. And you can see the human is not in the loop on the right side. So that's why our point that the human in the loop is a big cost here. Who's going to pay for this? The information and knowledge worker is going to pay for this, right? And this is in the US market. Total labor spending that we calculate from 83 million information workers comes to 9 trillion. If you take 5% of that, you get to close to 500 billion. So information workers, we're all seeing the headlines, Meta, Block, they're all, laying off in terms of productivity. The story from Jensen Huang and I think Elon Musk in terms of AI is going to benefit everybody is starting to, I think, lose some momentum. So we'll leave it at that. I hate to end on a negative note. I think AI is here, but somebody has to pay for this, so I think we are going to have to pay for this. Thank you.